Today we're going to talk about a stock called dLocal, in particular why it dropped 50% in the last trading session. So the last time we looked at dLocal was in late September, and we really liked what we saw. The firm has some marquee clients, the biggest names in the world: Amazon, Google, Nike, Microsoft are all clients. And what they do is they allow these large companies access to emerging market payment methods so that, for example, Nike could begin selling shoes in Nigeria without having to do much, just by calling a single API. So we went long dLocal last week, and then just yesterday a scathing short report came out, and you can see on the stock price chart here that report having come out, look, about midday there, and then the reaction of the market was to sell off significantly. It dropped about 50% on heavy volume. So we wanted to evaluate that report to see what sort of credibility it presents. So here's an article from the FT that talks about Muddy Waters. They describe them as one of the world's best known short sellers, and the company says here, while we have found no pictures of its CEO wearing black turtlenecks, that's a nod to Theranos, our research leads us to believe that dLo is likely a fraud. So that's a pretty strong statement. And here they say we're skeptical of their total processing volume, but highly skeptical of its take rate. So that would be the percentage of money they're able to rake off of the total volume that goes through their platform. And then they make this statement: to hide a lie, 1,000 lies are needed. And that kind of provides the context for the inconsistencies that they find pointing to fraud. So they talk about how there are repeated disclosures about the total payment volume and accounts receivable that contradict one another. There's contradictory discrepancies between two key subsidiary accounts, and that they make the statement here: these types of seemingly innocuous misstatements are instead often signs of cooked books, because it becomes difficult to keep the lies straight once you start telling them. So let's look at an example. Here's a chart that they provide which shows the growth of total payment volume they call this a bridge here on the left, from different categories. So from existing merchants, from cross-selling, and then you see the highlighted there, new merchants. So in 2019 there was 471 million, and then you can see the second highlighted value there was 343 million in 2020. Well, then on the right-hand side you can see this poorly put together chart that shows different numbers. And honestly, I'm having a real hard time even trying to understand what this chart is showing us. But they say here, despite such a massive change, dLo provided no explanation. It did not even highlight that it made such a revision. I would doubt that they even noticed the mistake. And that, of course, is debatable, whether or not they intentionally used incorrect numbers in an attempt to relay a message that was deceptive, but it could also just be a simple mistake. Another example that they provide here is in a particular document. On one page they use one value, and on another page they use another value, and it's 11% off. Well, this could be a case of usually when they'll produce these types of documents, they would lock the accounting system or close the books and then run everything. And it could be just a case of timing and, again, just a mistake. And perhaps the worst offending mistake they made was this related party transaction, which involves some loans that were made to senior management team members, particularly the president and CEO. They needed money in order to purchase their options, and they were going to take this $31.5 million loan. And in one instance, it said they did, and then later on, they provided some clarity around it to say, well, actually, it says the loan repayment had not started, and therefore neither the shares nor the loan were outstanding. So they kind of backtracked, and Muddy Waters saw that as, if not extreme incompetency, then evidence of fraud, though our interpretation of the whole thing is that it's rather benign. Now, what you need to pay attention to in the reports from dLocal is they talk about how they manually conduct a lot of processes in their operations. And they say here, they spell this out. Several of our functions are performed using a number of different information systems that aren't integrated, and that they rely on individuals to manually perform a lot of activities rather than ideally having their systems and processes automated. So they give the example here of their treasury functions requiring many manual reconciliations and other manual steps, which result in a high risk of errors. So it wouldn't be surprising then to see mistakes in their financials. And this, of course, is a big concern. And the company addressed the Muddy Waters report with a press release, and they said, dLocal will rebut the allegations in the appropriate forum in due course. And certainly we're glad to see a company say something the same day that a report comes out. That's ideal. And of course, address the report allegations. We've seen cases where that doesn't happen, and it leaves investors with a lot of questions. More importantly, customers, what are they thinking? So that's something we're certainly waiting to see. Now, the other accusation made by Muddy Waters was around the high take rate at dLocal. In other words, why are they able to operate so much more profitably than their competition? You can see here in the chart how they're showing their superior revenue growth and profitability and how that's so much better than everybody else. And this particular table here shows their take rate, and there you can see in the middle the competitor Adyen. That's a company that we follow and have written about numerous articles. And you can see that they're able to make a lot more money than Adyen. And when you look at where that's coming from, around 44% of their total revenues are coming from Forex fees and gains. And Muddy Waters simply points out here that based on typical foreign currency spreads, it's impossible for them to have realized as much money as they say they can realize just based on simple math. We know the total payment volume. We know that the currencies that they're transacting in, and we can calculate reasonable spreads, and they're 2 to 3 times higher than they should be. Well, one thing that's quite curious here is that there are some very sophisticated institutional investors that have ownership of dLocal shares. General Atlantic, they're a large private equity firm with $80 billion in assets under management. They hold about 19% of dLocal shares right now, and they've been an investor since 2019. By the way, dLocal is quite a young company, only having come into existence in 2016, so it's not surprised that a lot of their operations are duct taped together as they now processing, I think last quarter, $2.7 billion in transaction volume. So that's one thing to note, that these institutional investors would likely have invested because of that high take rate, and they certainly would have had to probe why it was so high relative to the competition. Another example here, Tiger Global Management, last quarter, they increased their holdings in dLocal by 130%. So that's something to consider. Now, this comment at the FT is quite humorous. It says, Tiger Global are involved, so it probably is a shit company. Well, that's because Tiger has been one of those firms like SoftBank that's been quite loose with throwing around their capital, though lately their purse strings would have tightened, which is why it's notable that they increased their investment in dLocal. Now, there's some other concerns in the report that dLocal breached their Malta Tier 1 capital requirement. They seem to be avoiding UK regulators, and who wouldn't want to avoid regulation? It just creates extra work. They have unnecessary subsidiaries and geographic complexity versus Adyen. That's certainly a concern. We don't like complexity in the same fashion that we frown upon device structures. They have questionable auditor choices. When they had their two offerings, they sold $1.4 billion in stock, and the company netted only $86.5 million. The rest went to selling shareholders, particularly managers and directors. Now, people wanting to take some cash off the table, that's certainly understandable. We don't read too much into management taking profits on their shares, and they point to excessive turnover. Quite a few positions have been vacated, in the last 6 months or so. That's always a concern for any company, particularly when it's the chief operating officer and the chief technology officer. So what's next for dLocal? Well, they're in damage control mode, so we'll see what they have to say, whatever that appropriate forum might be, and how they respond to the allegations in this report. We'll pay close attention to that. And stakeholder reactions. This is probably the biggest thing to pay attention to. Will customers cancel? And dLocal needs to manage that. Customers will certainly have concerns when they see this report. And then on the institutional side, will we see institutional investors like Tiger using this as an opportunity to add shares that are significantly discounted, 50% off, or will we see them run for the exits? Certainly inaction would be considered a vote of confidence as well. So if we had capital left to allocate to this position, we wouldn't add until the dust had settled. And, perhaps that's early next year when we give this some time, see how the company responds, and make sure that no customers or key investors bail. So just to conclude, we're going to wait and see how the company and key stakeholders respond to these accusations or react to them. Inaction is a sufficient vote of confidence, as I said. Any large customers exiting or key investors dumping large quantity of shares means we're also calling it quits on our dLocal position. So please put your comments in the comment section. Make sure to subscribe to our channel. Thanks for taking the time to watch this video today.